How are we, my friend?
Hello, how are you? All good?
I'm doing incredibly well. We are
Nice.
4.5 hours almost into streaming. We're having a blast. We're looking forward to having
Wow.
you on this segment.
Great. Looking forward to it.
Tell us a little bit about yourself, your background, and we'll get into the questions. I have so many
Great.
already.
So, of course, I'm Michele. I'm coming from a management consulting background. I basically started my career in M&A. I was doing, mergers and acquisition between banks and financial institutions. Then I discovered the world of fintech when I made a first investment in a UK-based fintech startup back in 2017, 2018, something like that. And that first investment was also my first exit, and that, got me in the game. And I started to move my career and my investment thesis more and more into fintech. And now I'm in this industry since the last 10 years, working with different companies all over Europe. I'm an investor in this field, mostly with early stage startups, and I'm trying to help early stage startups, early stage fintech startups all over Europe, being a mentor and an advisor in many different kind of incubators and acceleration programs, trying to, give back a little bit of the skills and the experience that I made in this industry.
Michele, you love the game. Obviously, we can see that from how you talk about it. Can you give us a little background on the fintech ecosystem across Europe? Like in the last decade or so, what have you seen and how has it transitioned to where we are today?
Yeah. So I think that overall, let's say we should talk about the startup ecosystem overall in Europe, and then a specific focus on fintech, in my opinion, because we saw different kind of trend in the startup ecosystem in Europe. We saw a lot of comparison, for example, with the US, a lot of comparison with other ecosystems over time, and Europe has always been lacking a little bit behind, in my opinion, under that point of view, in terms of ambition, in terms of capital, all of those kind of things. But then when you're coming into fintech and specifically into certain kind of trends in fintech, like for example, digital banks, payments, and another couple of trends, I think that Europe did a great job in the last couple of years to actually try to push that kind of environment. So, quick example here, I think that in Europe we have some of the best neobanks that we have all over the world. And if you take the same kind of comparison and you take a look at the US, you don't see that kind of innovation in the UX. In the US, there is a very traditional market for banking with very traditional players, and neobanks weren't able to actually, have an impact over there yet.
Mhm.
So I think that the kind of hyper regulation and kind of, let's say, startup environment that we have in Europe was actually a very good field for neobanks, for example, and digital banks to actually grow and have an impact on every everyday user. So that is a very good example. But we also are, leading in other kind of trends, like for example, payments. We have a very good champions over there. That is Adyen in the Netherlands. That is a wonderful platform in terms of payment orchestration. That is at the same level in comparison for some of the big players in the US. So I think that
Mm.
from a fintech perspective, I think that Europe is defending itself pretty well under that point of view. Obviously, we have the same kind of problem that we have in other sectors and other verticals in the startup ecosystem. So we lack a little bit the ambition. We are still lacking the same kind of capital that is present, for example, in the US. We are still tied to a lot of regulation here that we are still, need to comply to in a way or another. But I think that in terms of fintech, we're defending ourselves pretty well.
I want to touch on a couple of things in here. One, most importantly, this exodus of capital that we have. Maybe not exodus or lack of capital. Do you see that boots
Mm.
on the ground, where from angel investments that you make, but also these larger players that you end up being around? Is there just a lack
Mm.
of capital in being poured into fintech?
That's a very good question. I think the answer is no. So when coming to capital, one of the biggest issue that you find in Europe was the lack of capital in the very early stage.
Mm.
So if you are a very very small startups that you're starting right now, let's take for example a couple of markets here. Let's suppose that you are in Spain or in Italy or in Greece. You will have an hard time to find capital to start and moving the first steps in the market because those kind of countries are very traditional. They don't have huge or very, let's say, experienced VC ecosystem. So if you're starting right now, you will find a lot of problem. But if you are able to start, if you're able to prove traction, validation, if you are able to grow, when you will land on the Series A stage and Series A moving forward, you will find a very good ecosystem in Europe in terms of, for example, of VCs and professional investors. So we have the capital what we are missing, specifically, in my opinion, is the risk appetite.
Mm.
So we are, of course, a country that is basically coming from years and years of wealth and
We try
very
to
good
break this
life.
down.
Let's
It's like
call it
it's
like
it's
that.
kingdoms as well, right? We've always looked up.
Exactly.
We've had a bourgeoisie. We've had people that have worked under kingdoms and upper
Exactly.
society, and so like that is sort of innate within our ecosystem, within our society.
You're absolutely right. And when you reach that kind of, life, let's call it like that, you don't want to take much risk, because taking much risk, it can also come with a expectation of losing something on your side. So you try to keep what you have, okay? And that, of course, is adverse to risk taking. In the US, there is the opposite mentality, for example. Even if they are very wealthy on average, of course, they tend to take a lot of risk even early on. So they
Mm.
suggest and they invest a lot in early stage startups, because they tend to see, the kind of upcoming benefit of having those kind of investments. So I think that we are missing that specific early stage part. But then when we are coming to Series A moving forward, I think that we have a very good example of very good VCs in Europe that are able to spot and invest on very good companies in Europe overall and in fintech specifically. So under that point of view, I think that we are in a very good shape. So we are not missing the capital in itself. We are missing the risk capital under that point of view.
So it's the risk capital that we have to change. And do you think it starts with people like yourself as well, where you are taking more bets at really early
Mhm.
stage from those angel checks, or actually there's an education piece that's required for the ecosystem from a like institutional level, i.e., education, that has to change as well?
I think it's more on the institutional side.
Yeah.
So the kind of effort and the kind of value that I can bring to the market is very limited. So it's limited to my own experience, my own skills, and of course my own check size, of course. But if you allow, for example, institutional investor, and more specifically, for example, pension funds to invest in startups, you will have a huge amount of capital flowing into the market. So, for example, a couple of regulation on that point of view that happens recently in Germany, if I remember correctly, and also in Italy, that require pension funds to actually invest a certain part of the capital that they have under management in VC and in venture capital specifically. That is something in the direction of 2 to 5%, something like that.
Mm.
I could be wrong, of course, but that only that, taking in consideration that kind of amount of capital, that could boost the ecosystem like in a huge way, having a huge impact on
Does
certain kind of
does that
market in
actually
specific.
move the needle though? Does 2 to 5% just like get it done, or actually there needs to be 10%?
I think it would be needed to be more than that, probably more towards 10%, even higher than that. But at least also reaching, for example, 5% will have a huge impact on the market. Try to take a look, for example, at what is happening in the UK. The UK has one of the best, probably, VC market in Europe, if not the best VC market in Europe. And the kind of level and quality of early stage startup present in the country is unmatched everywhere else in Europe. Okay. And that also comes with the fact that you have a lot of very institutional investors, a lot of family offices, and a lot of people that actually know how to do those kind of things in terms of investing in startups, in terms of investing in private equity, and all of the kind of trends that you see in the market. Everywhere else in Europe, you have limited amount of people that are actually aware of those kind of investment, aware of those kind of assets. Okay, but if you take in consideration the kind of asset under management from institutional investors, pension funds, even banks, for example, even taking a mere 5% of that amount of assets will make a huge change in many of the startup ecosystem that we have in Europe. Take, for example, Italy, Spain, but also Eastern Europe, but also Germany. You will see a huge amount of companies actually thriving and blooming from this kind of investment, because that's kind of capital that is stopped and blocked over there, that is not invested.
Do you feel like that investment or those investments will end up just going towards B2B SaaS because that's the sort of flavor of the month or flavor of the years so far at this
Mm.
moment? And actually, in reality, for Europe really to compete on a global stage, it has to be poured into deep tech, poured into these like very, very in capital intensive research products, startups, etc. But the reality of the situation is that our investors do not want to be locked in for that period of time. And you need a certain
Mm.
type of capital to sit there and actually just fund this thing until profitability.
That's actually a very good question. To answer that, there is a very interesting trend in VC going on right now. That is the one about continuous funds. A couple of very good examples are, for example, Sequoia, that is continuously raising the same funds since I would say beginning of 2000 or something
And so,
like that.
break that down for us. Continuous fund is the same size every
Yeah.
single time. They're not rolling it into a bigger one.
No, basically, continuous fund is the same fund, and you can continue investing in the same fund without the need to actually close that fund and start investing. So you start raising for the fund and you start investing at the same time. Okay, so you can continue for example, fund one over time. That kind of setup and other trends in the VC ecosystem. So, for example, with funds with a shortened lifetime, instead of having the traditional, 10 years fund that start deploying from year one to year five towards, let's say, year 6, 7, and then start, getting money back from year 7, year 8 until end of life. You get funds that are actually giving money back between year 3 and year 5. Okay, so they deploy very, very quickly and they start getting money back as soon as they can. So those kind of trends and different kind of setup in the VC ecosystem are trying to solve that problem right now. But that is actually a very good point, to be honest, because having your money locked up in a fund without possibility to getting that back anytime soon before 10 years is actually a pretty bad deal if you think about it. And the only way to justify something like that is the huge amount of return that you can take after 10 years. But taking consideration that, you can obviously see that only a certain amount of people can actually afford to do those kind of things, and that is pretty limiting. Mostly in a very democratic society like Europe is, So having the possibility to lower down that kind of requirement for normal people, average salary people, that would open up the capital immensely for European startups. So I think that a change in terms of environment, in terms of, let's say, VC setup, could also potentially boost that kind of speed up that we absolutely need at the moment.
It's part of that fractionalization of the block that we have. And then you've got the UK trying to do its own thing as well with post-Brexit. Don't get me wrong. I think there are a lot of people that consider themselves to be European in many regards. But the reality of the situation is that it is fractionalized across the whole of Europe. Obviously, with Andreas leading the charge with EU Inc., you see how that can come together under our own version of a Delaware Corp. But I just want to hark back to a different point. You talked about the hyper-regulation Europe has. Do you not think that that's actually why we've become beasts in fintech compared to the Americas?
Well, let me give you one point first about EU Inc. I think that will help immensely the ecosystem. To be honest, I'm a strong supporter of that idea. To be honest, so I would love to see it happening sooner or later. But coming to your second question,
I've just got to ask: have you got your hat? Have you got the hat
no,
yet?
I don't have the hat yet.
I need to get the hat for the stream.
Yeah, absolutely. I need to have it. I absolutely need to have it. But coming to your second question, I think that, let's say, there is not just one single reason why we over-regulated that, and why that kind of over-regulation actually helped us in fintech, while, for example, pushing us back in every other market. And I think that there is a variety of factors. So, for example, hyper-regulation obviously is killing us under many point of view, also in fintech. So doing certain kind of things, for example, under the neobank perspective or in digital banking, it's very, very hard right now in Europe, because you need to have a lot of check, a lot of regulation, a lot of monitoring, a lot of reporting going on at the same time. And that is pretty hard for early stage startups. So if you're starting right now, your main focus is not on the reporting, probably is not on the continuous monitoring.
I think the argument that I look at, Michele, is that do we need another neobank? We've got these beasts in Revolut, Starling, Monzo.
That's a good point. That's absolutely a good point. But my point is kind of different. My point is that kind of hyper-regulation that is preventing certain kind of new startups to be born right now, it's also helping certain kind of companies like Revolut, like Monzo and others, to actually strive and making a very, very good, returns and very good results in this market, because you can actually think of, okay, I am opening an account with Monzo, I can be safe and sure that account is regulated, is protected, is monitored, and that my money is safe at the moment. Okay, so you are pretty safe under that point of view. Instead, in other markets, you see fintechs way less regulated that are maybe moving faster, that can actually be pretty risky. Like, for example, in certain countries in Southeast Asia, certain countries in Latin America, we saw neobanks and we saw, for example, fintech startups going bankrupt one day to another, and leaving people without any money. So that is kind of a problem. That is not happening in Europe because maybe we over-regulated certain part of the let's say of the environment, but that kind of over-regulation actually helped us, having solid startups under that point of view.
You
So it's kind
obviously
of a dual benefit, let's say.
you've spent a lot of time, it seems, like trying to deeply understand this regulation to see where the opportunities are, because obviously you've got to find your alpha somewhere of where to invest and find these amazing companies to invest in. Is there a specific part of the regulation that you look at and you go, we do not need that?
That's a very good question, to be honest. Actually, I don't think so. I mean, I can see a reason why every one of those regulations has been put in place in the first place. And I think that the answer is slightly different. So the answer is you probably need all of them, but you could say, okay, I need that, but I don't want it. That is kind of different, So, and it's up to the singular person, in my opinion. And it's also very much in line to the kind of financial education that we get on certain kind of things, okay? So you could see, for example, one quick example here. If you onboard on a digital bank in Spain right now, you need to disclose if you are politically involved at the moment, okay?
Really?
As part of the onboarding. Yeah, it's one question, basically. You just need to say, okay, I am politically involved or not. Very, very normal, and it's not just in Spain, it's also in other countries, but that question is present in the onboarding in many neobanks, okay?
Can I ask, is there a reason for that?
And that's the point. So in order to why you need to answer that question is that if you receive, for example, certain kind of funds or certain kind of money, let's say from political institutions, and you are politically involved, that is not allowed, for example, in Spain, and you need to be reported, okay? So if something like that happens, they want to know if you are politically involved, and maybe they don't want you to open an account with them. So I see the reason why they're asking that question. Maybe they could avoid to do that because they can easily check the transaction and can easily say, okay, you shouldn't get this amount of money, or you should report this amount of money, okay? Or they could, for example, report it to the Bank of Spain, but they prefer to ask the question first, okay? So that is one of those kind of regulation that you see it happening. Maybe you don't understand why. You could do it without, okay? But there is a reason why it's there, So, and it's making everything easier from the reporting perspective, from a monitoring perspective. And I think that is making everything more transparent and easier from a regulation perspective, okay? You can be sure that if there is a, politician out there that is opening a banking account in Spain, his transactions are monitored. And if he's making something wrong, those kind of transactions are reported to the Bank of Spain, okay? That is kind of let's say, a safety measure on your side in order to make sure that everything is done properly. So to answer your question, I think that everything that should be there is already in place. Sometime as a person that is working in this industry, I would say, okay, maybe I don't need that, but not everyone is working in this industry. So maybe someone out there doesn't understand certain kind of things, and there should be need of some safety measure to protect them and to protect their money.
I want to switch gears slightly into the Italian ecosystem, right? For me, it's very much a black box. We don't hear a lot of things coming out of Italy, and I'd like to be corrected on that on this show. Can you just give me an overview of the Italian ecosystem from your point of view, from a fintech perspective, but also from a startup perspective? What is happening there? Like, I know you guys make amazing food, and you've got Ferraris and Maseratis coming out of your ears. Don't forget Fiat. But like, what else is going on?
Well, this is actually a very good day to ask that, because I recently saw the funding round of 2 Italian startups that are very, very interesting. One of them is a fintech. The other one is one of the startups that I was mentoring during Techstars last year. They raised one raised 4 million and the other one raised 3.5 million from pre-seed round in Italy right now. The second one is a fintech company in the construction environment that is very, very interesting.
Did you say a 3 million pre-seed?
3.5 million pre-seed.
They
raised
hell?
Today. They announced it today. The company is called Pillar. I strongly suggest to check them out because they are a very, very good company.
Let's get them on the show.
They actually, Yeah, absolutely. I can make you an intro. More than happy to do that. And the other one is actually called Tips, that is actually building AI agents to help employees of enterprises to make their job. And they raised a 4.2 million pre-seed round in Italy today. They announced it
Insane.
today. That is, those are just two examples. You know, it's just a case that I happened to announce it today, but it's just the kind of example to show how the environment is, evolving right now. When I started to make angel investments in 2016, 2017, something like that, the Italian ecosystem was basically not existent. So if I wanted to make an investment in Italian startups, it was almost impossible for me as a business angel. So not as an institutional, but as a normal person that wanted to invest in companies. So for example, my first investment was in a UK based company. And during time, the environment actually became something totally different. So you can see right now the amount of companies actually raising rounds in pre-seed and seed, the amount of VC actually entering in the fintech market in the startup ecosystem in Italy every year is growing and everything else. And just for example, to mention the amount of VC that are, for example, also contacting me to ask for opinion on Italian startups, that was absolutely zero in 2020, for example. And this year we have a huge amount of companies, a huge amount of VC actually investing in the Italian ecosystem. We had Creandum making a couple of rounds. We have 13 books. Just to mention the one that are specific to fintech. For example, last year at Italian Tech Week, that is maybe the main event in the Italian startup ecosystem, we had 4 partners from Sequoia actually attending and speaking at the events live in person. So you see that it's that kind of environment that is growing, but in absolute transparency and reality, we are still lacking miles behind main European ecosystem like Paris or Berlin. We're still a little bit behind, for example, also Madrid in terms of VC investment, in terms of new startups. We are, in a different age from those kind of environments. In my opinion, we are at the same kind of stage that Paris maybe was in 2010. Okay, so when they were starting investing heavily in the ecosystem, and they get the first result, in 2016, 2017, something like that. So I think that 5 years from now, this kind of ecosystem will be crazy good, and we are growing right now. I would say that right now is the best timing to actually position yourself in Italy to start having your network, your startups, your ecosystem, and everything else. And you see a lot of funds actually doing that right now.
Thank you for breaking down the black box that is Italy. I'd love to ask: is there something that it's known for from the startup ecosystem? Like London is renowned for certain deep tech initiatives. France obviously has the research in Mistral. Zurich is robotics. Germany and Amsterdam have always been creative. Does Italy have a flavor? Does Italy have a genre?
That's a very good question. I would say probably the answer right now is no. I mean, we have a very diversified kind of ecosystem with startups coming from every verticals, from food to clothing to fintech. I think that right now there's a very very interesting verticals in deep tech, robotic, and space tech. So, for example, there is
Space tech,
a
love it.
whole yeah, there's a whole region, let's say in Emilia Romagna, that is one of the region in Italy, that there's a specific filiera of companies actually building for space tech. And we have a
Wow.
couple of very good companies in space tech that are tied to some major vectors, in Europe. So they've built this kind of ecosystem of companies around them. And there are a couple of very good startups that are being built out there. For example, Qubit was one of them a couple of years ago. There are other very interesting example of that. But I think that if I can mention one, probably space tech could be very interesting some years from now. Right now, I would say we are still pretty transversal. So we have a very good example in every single verticals. So for example, in fintech, I could mention Satispay. I could mention another couple of them in food tech, in agri-tech and others, but we have a very good example in every vertical, but still not a specific vertical that we are famous for.
I appreciate it. Like I'd love to ask. It's what some of the things we're doing on the show with VCs is. What are 2 standout companies? They can't be your portcos that are valued under 200 million that you look at and go, holy crap, they're building something insane. These are going to be generational companies. Can be across the board, doesn't have to be specifically within Europe.
So widely, you say. So something that is also outside of Italy. Oh, very interesting, to be honest. Hmm. I would have loved to mention, to be honest, Lovable, because I got in touch with them some time ago. I wasn't in the range to actually be able to invest, luckily for me. But yeah, that would have been a good choice.
It's got to
Something
be,
in the range of 200
it's
million.
got to be under 200 million, the valuation.
100, 200. That's interesting.
It just
100,
can't be one
200.
of your portfolio companies. So
Okay.
it can
So
be
I'm
in
gonna
Italy, it can
mention
be in the US, it can be in Europe, it can be on the moon for all I care, but it's just got to
I'm
be under
gonna
200
mention
million.
I'm gonna mention a company in Italy that is, in my opinion, rising a lot, and they raised around very recently. It's called Jet HR. They are handling, for example, the HR suite for companies, for example. So everything around hiring, paying expensing, paying salary, payroll, and everything. And the rate of growth that they have right now is unbelievable. And the kind of business development team that they have is top of the notch in every country that I saw. So I see them going in a valuation that is between 100 and 200 million very, very soon. Strongly suggest to check them out.
I love it. Look, thanks for your time. We're going to have to get you back on the show, but there's so much we haven't discussed. I'm
It's a
looking
pleasure.
forward to doing it again, my friend. Also, where can people find you? Because you write the most prolific LinkedIn posts I've seen. Dude, the feed is filled with you, and my feed is usually filled with me.
No, thank you very much. First of all, I have a very, very regular newsletter that is going to be in your mailbox every Monday morning. So if you want to check it out, check my profile on LinkedIn. But usually, yeah, on LinkedIn, you should find me. You should, at least. So if you don't find me, probably it's my fault.
No, I'm not. I'm sure it's the algorithms. This has been a pleasure, my friend. I'll see you soon.
It's a pleasure. Looking forward for the next time.
Absolutely. That was Quixote on the show talking to us about all things marketing, brand partnerships, and most importantly, culture. Because that is why we're in the game of, it's why we play the game. It's because we want to be part of culture. That's what every brand wants. They want to be the household name. Ladies and gentlemen, that is the end of the docket. We want to say thank you to the entire docket that has made this possible, reporting live on the Renaissance across the block, technology and business. We've got some new shows coming out across Europe as well. Have you seen? And to our 9 guests, absolutely incredible. Some of this was put together incredibly late. So we will be back next week, maybe earlier, who knows? But we want to say this has been made possible by ACI.dev, Newsmark, and Dojo as our partners on the show. Hilariously coincidence, we had a partnership director giving us tips. This is how we do it, 5.5 hours on the stream, or 5 hours, 14 minutes and 50 seconds as of now. Thank you so much for tuning in. We'll see you next week. This is Ventures.